Hey, what's up everybody? It is Monday, July 29th. Monday, I sent out the new edition of MMT Trader. If you want to get that, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial. Don't forget, you could also get Zombie Trading, my daily Forex signal service. And of course, I have my courses there. The 25-hour Forex video trading course. That's $250. The Understanding the Daily Treasury Statement course, $99. I've said it so many times, that's going to be the best $99 you've ever spent. You'll learn everything about the daily Treasury Statement. That is literally the checkbook of the U.S. federal government. There is no resource out there that beats that thing in terms of its timeliness. It's like real time. It's every single day. You see these flows of billions and tens of billions and hundreds of billions and trillions daily in and out of the banking system. You can make money off of that, but you have to know how. $99 is my video course, and the other course I have there is MMT Value Stock Selection course. You can get all three of them bundled together for $295. All right, that, as far as my announcements go, that ends that. Let's talk about this week. We got a big week coming up. Big week. Big week. Of course, the Fed meeting on Wednesday. Market's expecting a rate cut. I'll talk about that in a second. Tonight we have the Bank of Japan meeting. No rate action is expected, but likely they will, as always, Kuroda, he will talk about the challenging conditions in the Japanese economy, the inability to raise inflation. Of course, these guys, they don't even understand that zero rates or negative rates is deflationary. There is no inflation when you're setting negative interest rates. Same thing with the ECB. They can't seem to understand it, and the Fed is going to fall into the same trap now with this rate cut. So we have the Bank of Japan meeting tonight. We have the Bank of England meeting on Thursday. I'm sure their statement and outlook will be dovish because of the whole Brexit situation. I don't expect either of those two central banks to do anything or say anything that will be beneficial for their currencies, at least in the eyes of the zombies. The zombies will be selling yen. They'll be selling the British pound. Tonight, the yen and British pound on Thursday. And so now we come to the Fed. Let me just mention the end of this week. Friday, we have the July jobs report for the U.S. And I will come out with my forecast on that. Remember, last month was very strong. I'll come out with my forecast on that on Thursday. Now, let's talk about the Fed, where right now there's an 80-something% probability of a 25 basis point rate cut. I don't like to make guesses or speculation on what they're going to do, what they're not going to do. My preferred mode of operating is wait until policy is enacted and then take the right position. But if you want, I'm going to throw out my guess as to what they're going to do. I think they're going to do a 25 basis point rate cut because that's Powell, right? He totally follows the market. Totally follows the market. Might as well not even have a Fed if it's all about following the market. But he's going to do a 25 basis point rate cut. The market is not going to be happy about that. They want more, even though it says 80% built in the probability in Fed fund futures where they're trading right now. My sense is the market wants some pizzazz, something big, all right? And they want at least a 50 basis point cut. So what's going to happen if they do 25? That's going to rally the bond market because the bond market vigilantes, or whatever you want to call those guys, the bond market zombies, they're going to say, hey, Fed, that was not enough. We want more. They're going to price in another rate cut for sometime later this year. So bond market is going to rally. Dollar is going to rally because it's going to be perceived as not a big rate cut. All right, you might even get a marginal new high in the dollar index. We're very close right now. Let me mention something about the dollar. I do not believe that given the Fiscal deficits right now, 798 billion US fiscal deficit, and we still have 2 more months left in the fiscal year. That is the highest deficit in 7 years since 2012, okay? 798 billion. So we could get up to $1 trillion, all right? And the trade deficit, very, very wide as well. In fact, we saw last Friday on the GDP numbers that the net exports, which is normally a subtraction from GDP because it's always negative, U.S. runs trade deficits, that was a large subtraction, all right, because we had a ballooning of the deficit in the second quarter. So what I'm saying is, yes, the Fed's going to cut interest rates, and that is bullish for the dollar, but it's a 25 basis point rate cut. Other central banks are cutting as well, so you have some kind of jockeying going on. But the fiscal deficit and the trade deficit over time limits the ability of the dollar to rally. That's my view, okay? And it has been my view. So we have that coming up. If the Fed goes 50 basis points, I think that's it. I mean, unless they come out with their, when I say that's it, I think that's the top in the bond market and the bottom in yields, unless they come out and say, hey, we're just starting this thing. And you know, when you look at the dot plot, their expectation for where rates are going to be 1 year out, 2 years out, etc. If that thing really drops, then this bond market rally is going to continue with some resistance coming in very soon when the debt ceiling gets suspended. Now remember, the Senate still has to vote on that. All right, and that's going to happen this week. Hopefully, that's what Mitch McConnell said. These guys are all going on vacation on Thursday. The House voted on it last week. They passed it, so the Senate has to vote on it this week. And it's supposed to come up for a vote, but right now, haven't heard anything. Haven't heard anything. Once the debt ceiling is lifted, we get a resumption in the sale of treasuries. And by the way, we're coming into that period around August 8th when we have a peak in bank reserves. Now, I'm not going to get into what that means. My subscribers understand what that means. If you want to find out, you got to sign up for a 30-day free trial of MMT Trader. That is a very important development. I've been talking about these ebbs and flows in bank reserves. They have been creating this kind of cyclical back and forth choppy action in the stock market now since March. And once we get the suspension of the debt ceiling, a lot of things change. But August 8th, thereabouts, is when we are going to get the new peak in bank reserves. It's happening as we're talking right now. Reserves have been building back up. And so, yeah, everything is in place. Stock market is in a bullish mode. Sentiment is not overly bullish. As a matter of fact, it's neutral. There's actually a slightly above average level of bearish sentiment. There's a below average level of bullish sentiment. And when you look at the put-call ratio, that could come down a lot more before we see a top. So that's kind of a summary of what's going on. Go to my website, pitbulleconomics.com. I got the courses, I got MMT Trader, I got zombie trading, everything on there, plus my daily emails. I send out numerous emails during the day. All right, everybody, have a great day. See you tomorrow. Bye-bye.